Hello and happy afternoon, Friday afternoon to you, Zinger Nation. Jonathan Mallard here with a Friday edition of Making Money with Benzinga Pro. We're going to take a look at some wins of the week, how you can get in on wins like these even next week. And my friend Ryan Faloona is here. It's going to be a great show. Ryan, good to see you, sir. Happy Friday.
Happy Friday. How's it going, Jonathan?
I am doing great, and I'm really grateful to have you on here. I know you're super busy, so thanks for taking time out of your day. And just for everyone who's new to this show, in case anyone hasn't seen other episodes of Making Money with Benzinga Pro, we bring on different guests, take a look at different strategies that you can use using the Benzinga Pro platform. And there's a link in the chat to start a free 14-day trial. Check it out. And regardless, there's going to be some great opportunities to talk about here today. So, Ryan, I'm just bringing up my screen here because we're talking about some of the opportunities from today and this past week. And I think that Clever Leaves obviously is something that was moving today. So what really stuck out to you about this? You know, what brought it to your attention?
Oh, yeah. Sorry about that. I have my squawk going, which, by the way, probably my favorite feature of Benzinga Pro, but I digress. The catalyst for Cloverleaf. So two things brought this trade to fruition. Number one, we had a catalyst yesterday regarding a bill being submitted to the House floor for decriminalization of marijuana. And of course, that's going to cause the marijuana-related names to move to the upside. This has been viewed as one of the big headwinds, stopping some of these names from really appreciating. So we got that catalyst yesterday. And today, the key here was going to be identifying the stocks that are in play, right? The stocks that are moving around. So I actually used the scanner in order to identify that. So we're using the news feed to find the news catalyst, and then we're using the scanner to find the different tickers that are moving, in this case on relative volume, and then we're marrying those two things together to make a trade. And this trade, in this particular trade, this was a short-term day trade that we were making. And everything came to fruition here. So I'd be happy to. I see that you already have the news catalyst up there. I will be more than happy to kind of show you the scanner part of it when the time is right.
All right, perfect. So just for clarity here, we're inside of the details tool, taking at news on this particular company. And by scrolling down here, I can see that there was this WIM tag, which stands for why is it moving, that came out this morning just before 8 a.m. And so that helps to know whether this is a really powerful catalyst or just some pump and dump situation. You can trade it either way, but it affects the price action of the stock and sometimes in this case the overall sector. And then we can take a look at the chart over here, and you can see that it was up in the pre-market and even after hours yesterday, and then obviously some trading opportunities with the volatility in the regular session as well. So Ryan, do you just want to share your screen with the scanner? Perfect.
Sure. So here it is. This is what my scanner workspace in Benzinga Pro looks like. And what's great is that I know we're going to cover here a cannabis trade first. But the important thing to realize about this scanner is that this is not specific to cannabis. This can be anything that's trading on relative volume. In fact, look, our ticker here, CLVR, is literally appearing on the scanner live as we're talking. That's pretty cool stuff. So anyway, we already talked about the news catalyst. That's the underlying catalyst that's causing this stock and others, frankly, to move to highs or to put in the move that it's putting in. And you can see that this move here today is a continuation of the move that we had yesterday. That news catalyst that you just showed was from the day prior, was from Thursday. So you can see yesterday in the afternoon, there was an opportunity, but we're focused on the trade that happened today. And that's where the scanner comes in. Now, the reason that I have the scanner set up like this is because I'm trying to find things that are trading on higher than average relative value. And the reason for that is because I want that liquidity. I want the liquidity and I want the volatility, meaning if there's a whole bunch of eyeballs on this particular ticker, this is one of the tickers that's moving around. And if the volume is increased over regular levels, then that's going to be more liquid for me to get in and out of my trade in due time. And in this case, this is a day trade, so we're looking to not even hold this overnight. So just to kind of set the stage here, I've mentioned relative volume several times. Let me go ahead now and kind of put a bow on it, if you will.
And is it possible to zoom in on that
Yeah, of course
scanner a little bit more?
Absolutely.
That'll
Absolutely. I'm
help.
sorry about that. How's that? That looks pretty good.
That's much better.
Okay. So what I have here, what I have here is I have the filters menu expanded, and you can see, and I'm on the active filter tab. So this is showing you the active filters that I have. Well, there are plenty more in the other sections. I encourage you to check them out, but we're going to focus on the ones that I've put on for this example. First one here is we're looking for common stock ETFs and ADRs. This is a default. This is the type of instruments that you're looking for. I'm not necessarily interested in scanning for things like warrants or ETNs. I'm more interested in the common stock. And if it comes from a different country and there's an ADR for it, that's fine too. And I also enjoy trading ETFs. ETFs, by the way, very, very liquid. So that takes care of the first filter here. The second one here is just straight up volume. And this is volume on the day. And again, the reason for this filter is simply liquidity. In this case, the stock needs to trade, over 1 million shares on the day. That's going to guarantee that I'm going to be able to get in and out of my, in this case, several thousand share position, right? I'm not trying to build a million share position here, but I need to be able to get in and out in the same day. And the volume filter is going to help me do that. Now, the relative volume, this is probably the heart of this scan, and this is going to be the important part to understand. Relative volume is looking for volume that is above average, and it's comparing it to the same rolling 5-minute window as the previous session. So if I mouse over the question mark here, you'll see the relative volume tooltip. If I can keep my mouse on it, the relative volume tooltip will tell you exactly how this works. Compares the past 5 minutes of volume to the 10-day average volume of the same period. That's important because volumes around the open or the close are going to be much different than volumes around the lunch hour, where the market is traditionally lower volume. So we want to make sure that whatever indicator or whatever variable we're using is giving us timely results or results that are meaningful to us. And our vol, the way that it's done in our scanner here, does exactly that. Doesn't matter what time of the day that you check this, it's always going to be comparing it to that same 5-minute window versus the 10-day average. Okay, so it goes on to say an R-vol of 2 at 10:05 a.m. means that the stock did 2x the average volume it normally does between 10 and 10:05. So let's get to the value that I have here. I have 3, which means that the stock needs to be trading 3 times the average volume in order to populate on this list. That's great. That's exactly what I want. I want to know where all of the eyeballs are going. I want to know where the unusual volume is. And then lastly here, I have change percent over 1 minute. And basically what this means is that the stock has to be trading up. I'm a long bias trader. I make most of my money on the long side. Even when I take a short, which we're going to talk about here shortly, it's not actually shorting an equity. It's we'll call it a synthetic short. So I'm always trying to buy something. I'm always trying to trade to the long side. So as a result, I want to also scan for things that are starting to trade up. And this is change percent. And the reason that I have the value at 0.2 is because I don't want to wait for it to move an entire percent before it's alerted to me. I want to be alerted to that a little bit sooner. Some people call this the curl, right? If you look at a stock chart, and in fact, we can find one here. Let me show you exactly what I mean. This right here, this is the curl. The stock makes a big move. It pulls back. This is normal stock behavior. And then it kind of finds a level and it starts to curl back up towards the high. This is what I'm trying to scan for, and this is what change percent over 1 minute does across a rolling 1 minute window. So let me actually just zoom out just a little bit here. Now that we've covered those filters, again, that's common stock ADRs and ETFs, volume over 1 million, R-vol of at least 3, and change percent across the 1 minute window of 0.2. That equates to 0.2%. Now, the way that this actually works, this is constantly running, right? This requires, now that I've set these filters up, it requires no more input for me. The way I actually take advantage of this is I load up a details tool right next to it, and I click on the chart tab because I want to be able to take a glance at the chart and see if there are any levels that we need to pay attention to. In this case here with Cloverleaf, you can see that what this was doing is this was breaking down some of the pre-market levels. And in fact, the spot here on Cloverleaf was 210. You can see it actually popped through 210 and went all the way to 233. What's cool about this is that we can actually mark these levels off. So traditionally, you're going to have all of the pre-market levels marked off in the pre-market so that you're not doing this when it comes down to it. All right, let me go ahead and mark those off. And now, and then it's actually mark off a support level here. All right, and so now we have our key levels identified, which means when the stock's actually trading, this is going to be much easier for us to take advantage of. And you can see here that we did get that trade right here out of the open, but it turns out that we actually got another trade later on in the day, right? So the same stock with the same catalyst actually started to curl back up in the afternoon. So this trade happened, pulled back here, and then it starts to curl back up. And so one of the other things that you can do is this is a typical volume expansion trade at this point. You can see when it set this high before, the volume was at the highest point of the day. As that volume dries up, the stock kind of pulls in and trades sideways. And as that volume starts to expand again, so too does the price. And when it takes out some of these levels, it often pops. And in this case, it's actually running. So I traded this early in the morning. I didn't take this trade in the afternoon, but there's nothing that's stopping you from being able to do that. So, any questions? Were there any questions in the chat that I should go over? Is this pretty clear, or do you need any more instruction on this?
I'm not seeing any questions in the chat right now. Go ahead and throw questions in the chat. Give us a number one if you use the scanner to find plays like this, and any favorite filters that you use. But just those different factors coinciding. The spike in volume. There was a news catalyst, and in this case, breaking through those key price levels that you also mapped out in the pre-market. And just again, as a reminder, this was a news catalyst from yesterday, but we saw that in a "Why is it moving" headline from today that was affecting many of the cannabis stocks.
Yeah, and what's cool about the scanner here, this is the one thing I left out. Sorry, Jonathan. What's cool about this scanner is, although now that we have our criteria set up, it'll find any stocks that meet this criteria. So our example here is CLVR, but perhaps there are others that actually fit into this. What I do is, as the scanner updates here, I will basically just click down this list and see if there are other opportunities that are being presented to me. Here's TEL, right? This thing has been moving up all day today. So the cool part about the scanner is that you might have a catalyst, and that actually might help your selection of tickers, right? If you understand that there's a bill affecting multiple cannabis stocks, then cannabis stocks that appear in this list on relative volume might be worth looking at. And sure enough, CLVR produced several trading opportunities today.
Awesome. So yeah, that's a great example. Next up that we mentioned was FEMY. I think this was a scanner play, another scanner play from earlier this week, right?
That is correct. So FEMY, I believe that is right here on March 23rd. Again, using the exact same parameter. Now we don't have the underlying catalyst that we just talked about. However, what's really cool about this is, as I explained to you about the relative volume, remember, it's just looking at that and it's comparing it to the previous 10-day average. Well, what you see here is something very, very similar on FEMY. And in this case, it ran up to this 222 level on higher than average volume. You can see this represented by the actual sticks on the chart. at the bottom of the screen here might be a little bit difficult to see, but on your own chart, it'll be much, much easier. If you compare that to the previous days, I mean, you can see how little volume there actually was. And let me scroll back over here. You could see how putrid the volume is until the day that we trade it, right? There's a reason for that. We're looking for this type of action. Now, what happened here is that right away on the scanner, this thing appeared. And before I had any catalyst, before I knew to jump into it, I noticed that the stock kept stopping at 222. And now when I would look at the level 2, I would see, boy, there's a huge offer on at 222. And that, you know, the initial thought would be, well, if there's a whole bunch of people waiting to sell stock at that level, maybe the stock's not going to move higher. But the flip side of that is if that seller is removed, now you've kind of uncorked, if you will, the potential of this stock to move up. And that's exactly what we saw here. And so let me zoom in so that it's even easier to see. To see what happened is, first of all, this stock was trading up in the pre-market. It was starting to give back its gains, but it found its footing here right about at 202. It even traded down, didn't quite reach the round 2 level, but 202, and then it started to trade up on volume. Again, that's the key that we're looking for here. It made a high at 222. It stopped at that seller wall that I talked about. It pulled back a little bit. Again, this is typical stock behavior. You're going to see this all of the time, every single day. And then it ran back up to that level. It was unable to break that 222 level. So what happened? It pulled back. This time, it didn't pull back quite as far. And it held in there quite nicely. And then it started to go right back to that 222 level. Well, Jonathan, third time's the charm. Guess what happened? We approached that 222 level again. Boom, popped right through it. So as you're watching that, remember, the scanner's alerting this to you. As you're watching it go up to that level, I marked this off on the chart before. I said, okay, if that 222 level is going to fall, I'm going to have a scalping opportunity here. Sure enough, 222 fell, boom, scalp the stock right here. Now, the keen observer is going to realize that, hey, this stock pulled right back after it went to those highs. Yeah, stocks are going to go up and down. Your job as a trader is to capture the stock's movement in one direction and profit off of that. This scanner, this tool right here is going to help you do that. And that's exactly what we're showing you. Now, the cool thing here is that, as you'll notice, it started to drift back up. Now, remember, we don't have those huge volume sticks that we've just been talking about. So I'm not necessarily looking for a new trade, but look what happens the next day. In the pre-market, this thing absolutely rockets again, and it happens on volume. And then out of the open, it sells back off, starts to move back up to the high, and then finally it's kind of come back to where we're at here. Now, what's great about this is that this 222 level, this was in play the other day. Well, guess what? It's in play again today. Stock is having some trouble getting over it. It did pop to, it looks like 226, but it came right back to 223. So perhaps that 222 previous resistance now acting as support. So even without the news catalyst here, the scanner was able to alert me to this opportunity. And then as the trader, it's my job to take advantage of that opportunity.
That's a great explanation. What's interesting there too with that big pre-market spike was as it drifted up throughout the day, it took out that intraday high. And so then it was prepped and ready to rip that next morning.
And that's exactly what you saw, Jonathan. That's exactly what you saw.
And hey, what's up, Thomas, James, local president,
Black Mage,
I think Black Mage. Good to see everybody in the chat.
A lot of people I recognize.
And just to answer the question, yes, you can scan by sector. So on the scanner, you just go to the filters, and then you can choose a sector if you only want to choose specific sectors, financials, healthcare, commodities, whatever you're looking for.
Right there. Folks, that's in the reference section of the scanner filters that Jonathan was just talking about. Remember, I was showing you active earlier, but if you go to reference, you will find sector in there.
All right, perfect. Next up, we have an earnings play, I believe, on ONDS. Let's see. I think this was from a couple days ago.
I believe it was Tuesday.
Right. So looking back to Tuesday on ONDS, and notice how we just went to the details tool, and right now this is a recap of the whole week. So we're just going straight to the details. This would have shown up on your news feed as well with that earnings catalyst from Tuesday.
Yep. And a couple of other things too. There was some news prior to this that affected a stock ticker AVAV, and they had to do with drones being sent over to Ukraine to help in the conflict that's going on there. For ONDS, we're going to focus on just this specific stock. They actually reported earnings in the morning. And what's cool about this is that a lot of people just look at headlines. And in fact, algos, which I'm sure some of you have cursed out at some point in your trading career, algos, generally speaking, just look at the headlines. So if you look at the headlines here, we've got, okay, the Q4 sales missed the estimate by 250K.
Okay, sorry, could you zoom in a little bit again?
Yeah, you know what, John? I'm sorry. I keep forgetting to do that. I appreciate the reminder. Let me back out one more time. Here we go. That should be easier to see. So it missed the sales estimate. The EPS of -44 beats by 0.05, and the revenue missed. Okay, so on the headlines there, not so great. Let's take a look at the chart here real quick and see. Now, on the chart, on the morning that it reported earnings, you can see it actually was trading lower. You actually had an opportunity to get this lower than that you did the day before. You'll notice, however, that as soon as the market opened, this stock started to rip. You might be asking yourself, well, why is that? So it turns out that if you actually go through the press release, which of course you have access to here in Benzinga Pro, remember a lot of companies report their earnings via press release. So if you actually click on the press release, you can go through the actual press release and see what the company is saying. Now, I'm not going to spend a whole bunch of time on the show here reading through a press release with you. I encourage you all to go do that yourself. But the reality is that the headline was kind of deceiving. The headline, while it reported the numbers accurately, there's a lot of other stuff going on at this business that's actually quite positive. And then on top of that, there was also a conference call that had analyst questions that the market really liked. So what's interesting here is that you actually had a chance to buy this stock when it was down. And the people that do their due diligence, that's a term you're going to hear all the time, people that actually go through the press release and read it, you can clearly see that, hey, this company is actually doing really good. They're trying to grow and they're trying to become a quality company. And you can tell that the market actually rewarded this, because as soon as the market opened on high volume, let me zoom in here so it's easier to see. On high volume, this stock absolutely ripped, right? Again, this opened right around what, 633 or so, and had a high of 768. So you got more than an entire point worth of movement from trough to peak here on this particular stock. And it actually, even if you don't hit the bottom and the top, still a good amount of movement in there. And this is unlike FEMY, which was a pure scanner play. This didn't give everything back in 5 minutes later. It actually flagged and tried to take out that high again. Now, it was rejected at that high, right? We didn't have the volume expansion that we were looking for. It was rejected from that high. And then it tried to take that high out again in the aftermarket. The very next day, perhaps there were some profit takers, people sold into it. And then the very next day, right back up to that level. Now, today, it looks like it's sinking. The overall market is struggling right now. So I'm not going to read too much into that. But the reality is that this provided you a great opportunity. And I cannot stress it enough. Earnings reports where companies are reporting how they're doing and reporting their numbers, these are often quality catalysts for stocks to move. And that the easiest way, at least for me, to track that stuff is by using Benzinga Pro.
Yeah, thanks for that, Ryan. And yeah, and then let's see. Someone said Tesla's tanking. Man, Tesla is hovering almost exactly at $1,000 right now. So obviously a very key level after this huge rip over the past 10 days or so.
And simply looking to the left. So we're talking a little bit about technical analysis here. Simply looking to the left, you can put your cursor on that $1,000 line. And it appears that every time Tesla dips below 1,000, it likes to go back above 1,000. Now, right over here on January 21st, January was a really, really rough month. Tesla did, in fact, go beneath 1,000. But as you just mentioned, we're trading back up to that level. So what did we just say about one of those previous plays, Jonathan? Prior resistance becomes support and vice versa. So in this case, $1,000 acted as really good support. Every time we dipped beneath it, we actually traded above that. Those are potential trades that you can get there. And now that we've spent a number of days below that $1,000 level, I'm not really surprised to see that Tesla is encountering resistance at that same key level. So just to kind of go back to what you just said, I think you hit it right on the head. That $1,000 is clearly a key level, and you can identify that right here on the chart.
Awesome. And then today, one of the big headlines from today was a missile strike at an Aramco uh, refinery facility in Saudi Arabia. And that was affecting the queues. And then one of the individual plays that we can get to is IMPP. So we have a news catalyst that affected the entire market. I mean, this is a big deal. Of course, energy plays have been extremely volatile with what's going on with Russia right now and really the global atmosphere. And then here you get a missile strike at a refinery in another country for one of the suppliers. So yeah, Ryan, how did you go from the overall catalyst to the company specific catalyst?
Okay, that's a great question. So, two things here. If you've seen me on any of these programs before, you have likely heard me say, trade what you know. Trade what you know. You're going to be more successful doing that. Tech is one of the things that I know. I know it very well. I use it very well. I've been building computers for the past 2 decades, the whole 9 yards, right? So tech is something that I follow. So as a result, tech is one of the things that I trade. We just spent a lot of time talking about liquidity. And what I'm showing you here is a levered ETF. The fact that I'm choosing to trade an ETF means I know I'm not going to have any trouble with my liquidity. I'm not an institution, so I'm going to be able to get in and out of this position, no problem. I know from trading tech that the SQQQ is a leveraged short on the technology on the NASDAQ, and the TQQQ is a levered long on technology. So a missile strike into a Saudi Arabian oil field or refinery, excuse me, definitely a negative catalyst for the market. Shorting is not part of my investment thesis. I'm not big on it. I'm not very good at it. So I try to find other ways in order to capture downside movement. And what we're talking about here, you could consider a synthetic short. I'm not actually short any instrument. When I buy the SQQQ, I'm not short. I am buying the SQQQ, so I'm not exposed to unlimited risk. However, this asset appreciates as the QQQ goes down. So I have now created a synthetic short on the technology market, on the NASDAQ here. And so the cool thing about this particular headline is that this gave you multiple opportunities. You wanted to play the broader market because you feel safer or you know that a little bit more. This was available to you. When we got this was actually came off the squawk, right? Charlie had squawked that this happened. Look what happened here. As soon as you hear that, this is a long, right? We expect the market to react negatively to a missile strike and an ongoing fire at a refinery. We expect some of the sectors that trade up when the market is doing well to kind of reverse. And that's exactly what we saw here in the SQQQ. So again, if you don't trade ETFs, look into it. Don't necessarily jump into it right away, but look into it. This can actually be a very, very effective way of trading macro events like this. But Jonathan, you also mentioned individual stocks, and we just spent time talking about this missile hitting an oil refinery. So what does that mean? Let's think about that so that if this happens again, you know how to react to it. If oil prices are already going up because of supply and demand, and now there's a refiner that just got hit by a missile, it's feasible to say maybe that refinery or whatever company that belongs to or whatever conglomerate that belongs to is not going to be able to supply as much oil. So what does that mean? Well, the price of oil is probably going to go up. What does that mean for oil companies? The price that or the amount of money that they're going to get for their commodity is probably going to go up. So if we talk about IMPP, that was the ticker here. This is a small cap petroleum company that is no stranger to making outsized moves. Excuse me. And if we take a look at the daily chart, we can see that at one point earlier this year, this stock. Let me get these arrows out of the way. This stock went from 50 cents to $9 over the course of what looks like about a week. Okay, maybe a little bit longer, 10 days. So we know that this stock can move. It's also very, very low price. So you can probably buy more shares, even if you have a smaller account. So let's zoom into today's action. Okay, so stock's trading down, it gapped down a little bit. It's kind of mundane action here. We're kind of hovering around 165, and then as soon as that missile strike happens, boom, this thing rockets. Goes from one. In fact, it was actually 164. Goes to from 164 to 189. These are 1 minute sticks. So this happens in 1, 2, 3, 4, 5, 6, 7 minutes. In 7 minutes, this stock appreciates 20 plus cents. That is an excellent opportunity for a day trade. And you can see that we were not the only people thinking this. Look at the volume. This when we're looking for day trades, this is probably my top thing that I'm looking for. Volume. I want the price to be able to move because there's more buyers than sellers, or just because there's more volume. And I want to be able to get in and out of my trade. So in this case, we know we have an oil company here. We know what the macro event that just happened is going to affect oil as a commodity. And we know that we're dealing here with a company that's no stranger to making big pops and or runs in the past. And in this case, the recent past. So as soon as this happens, the immediate thought for the trader is, okay, long oil. Let's see what happens. Now, again, as Jonathan mentioned before, and as we've all told you, nothing is 100%. Your ability to manage risk as a trader is arguably your biggest asset, or it's what you're doing. You have to be able to do this in order to be successful. So as soon as this happens, you don't even have to wait for this little high to be taken out. Generally speaking, that's what we do when we're looking at technicals or we're looking at different trade setups. In this case, you've got that catalyst. You've got that underlying juice that's going to make this stock move. An oil refinery just got hit by a missile and there's a fire. Okay, so it would be different if this was the actual refiner that got hit by a missile. Maybe this wouldn't be along, but this isn't it. This is a different, smaller cap company, and sure enough, this stock popped. So I brought these two up because this is a really
Ryan. Just so you know, Spencer's going to kill me because we're killing into his show.
So, I just keep going, man. It's hard to stop me. I'm sorry. Great opportunity here.
No, but from the man himself, Ryan Faloona. Ryan, thanks for being here.
Anytime,
and hopefully you all learn some new ways to make money with Benzinga Pro. I'm going to get out of here. Have a great weekend, and we look forward to seeing you next week. Take care.
Did you know nearly all stock price changes of 10% or more result from a single news headline? That's right. News headlines have a unique ability to drive stock prices up or down. These news catalysts create trading opportunities every day. All you need is a little help to reach out and take them. And if you're looking to grow your portfolio, it doesn't matter if your investment budget is small or big. An easy-to-read stream of news headlines will increase your opportunities to profit from price changes in the stock market, consolidate a knowledge-based investment strategy, and grow your portfolio. All you need is Benzinga Pro and its powerful news alerts, price tracking, and portfolio monitoring to make a positive change in your trading performance. We've already helped thousands of retail traders across the world, and they could not be happier. Increase your market knowledge, boost your exposure to big movers, and make informed trades before major price changes. The opportunities are all around you. Subscribe now, and we'll skyrocket your portfolio today.